Hi, good evening everyone. My name is Ram Dhamija and welcome to my channel. I bring you the updates about our markets and how the derivative positions are and how the trades can look like going ahead into the next week. So for this particular week, the week ended on a slightly negative note, and overnight what has happened is that gift nifty has fallen big time, and that has happened because the US markets cracked overnight. So US markets actually went down by -1.5%, and because of that the contagion is kind of spread to the entire global markets. So our gift nifty has reacted to it, and gift nifty is almost down 200 points. At one point in time it was down, and Monday is looking like it's going to be a very tough opening. And if you see, it has been showing in the open interest for quite some time, wherein the open interest has been on the negative side. It has not crossed one for the last 3 weeks, I would say, except maybe one of the expiries wherein it went to about 1.1, 1.2. But otherwise, open interest has been on the sell side only. So there have been always been more calls written in the market for the last almost 3 to 4 weeks, and it has culminated into December 20th was one of those days when we had a sharp fall. And even tomorrow I'm suspecting that if the open interest further goes in favor of the calls, then we can expect even a big down move tomorrow, and that is what is being indicated right now in the gift nifty. So I will take you through what the how the scenario is looking like for the week going ahead. Now this is what the chart for nifty looks like. Now if you look at it, last low that we made was somewhere around 23,260 odd, and that low will tomorrow, if gift nifty goes down, it's going to get broken for sure. So we are going to break the last low. If you see over here, this was the last low. This was made somewhere around 21st of November. Now this is going to break. Now that's not a very good sign. So if you look at the trajectory for the charts, the if the market is in a bull run, then there are higher highs and higher lows made. But over here, as we can see, the higher high is still 26,200, and after that the markets corrected 11% straight to 23,260, but they failed to kind of make a higher high. So it was a lower high made at 24,850, and the lower low is going to get broken. So this is a pattern which is indicating a bearish setup. It is clearly showing that the market is very, very weak right now, and it's in the grip of the bears. And if you see, this is what exactly happened. Now this is a weekly chart. Now this is something exactly what happened in the 2021 bear market that came. So if you remember, in 2021 we made a high in nifty of about 18,000 odd. From there, if you can see, this is the high. From there you can see we drifted down continuously. We first went down over here, then we tried to come up, then again a lower bottom was made, again the high was not taken out. So this particular high was not taken out almost till about a year and a half later, and it got actually taken out decisively in March 23, when the bull run actually started. So March 23 was when the bull run actually started. The high was still taken out a couple of months after that in June. So which you see over here. So this is the kind of pattern which I'm seeing getting played out right now as well on the nifty. So a top, and then a bottom, and then the next top can't take out the previous top, then a further bottom, and so on and so forth. So this kind of a bear market last time when it started in September 21 lasted till March 23, wherein the market was flat. It bottomed out somewhere in June, July 22, but it lasted till March 23. So if that be the case, then we are looking for a long haul right now, because it's just been 3 months. I'm not saying it's going to repeat, but if it does, then we know that this is going to be a long haul. What are the things that we need to look out for as we go ahead into trade next week? Now, first and foremost, we need to look at our currency. Now, if you look at what the currency is right now, The currency number is showing that we have on international websites, it's showing that we have already broken 86. It's showing 86.16. Now the official rate might be 85.9 or whatever, but on the international currency sites we are already at 86. So that's not a good news. That's further trigger for FIIs to pull out money from India. The US 10-year yields are close to 5% now. So 4.7 it is showing. I think it made a high of 4.78. This is for 10-year. Maybe the 30-year I think made a high of 5. So which is not a very good sign, because if anyone is getting 4.7, 4.8% in dollar terms, then why will they invest in emerging markets? And that also somewhere gets manifested in the dollar index. So 109.65. Now this is unprecedented. This is again a new high. So this is going to create a lot of pressure on the markets. If you remember, the bull run ended when the dollar index was at 100. So that was the time when our markets actually made the highs, and from there dollar index has steadily climbed up. FIS have steadily taken out money from our markets, and it is now at 109. Now if this trade reverses, then yes, we can expect some sort of a rally in our markets. But if this doesn't go down, then there is going to be further FII money getting out. Now another problem that happened over the weekend is that crude has shot up to 3.69%. Now there is a news that there have been certain sanctions imposed, etc., and because of that all that is fine. But what we have been seeing is that this crude has been steadily rising from 69. Okay, and for the last 3 months it has been steadily been going up. So if you see somewhere over here, we made a bottom at somewhere around 70 odd. Okay, this was about 3 months back, and from there we have climbed to 79. Now this is not very good news again, because Indian economy is completely dependent on crude imports, and at 79 for the Brent futures, it is not good news at all. In terms of the US markets, they were under pressure. So Nasdaq closed 1.57% down, and the US 500 closed 1.6, Dow Jones closed 1.6, and S&P VIX jumped. S&P VIX is close to 20. So that itself is a problem. So we need to be very careful about that. Our VIX currently is at 15. So this is the VIX for S&P. It's at 19.54. Now our VIX is at 15, and it can spike up as well. So all the cues right now are not looking great. The open interest, again, as I had said, was again bearish. Not heavily bearish as we speak right now, but still bearish. Monday morning is looking very, very tough for markets. We will have to see how Asia opens, but there is a high probability that we are going to get a gap down because of all these developments that have happened. From there, where do we go? We fall further, we make new lows, or we are able to recover intraday. That we'll have to see. But the cues over the weekend are not very bullish. So one will need to have a stop loss in the system, not take too big positions, trade according to your setups, and move out if your stop losses are hit. So that'll be from my side, and I hope everyone has a good Monday, and everyone is able to navigate through this tough phase. So that's it from me now. If you like my channel, please do subscribe to it. Please share it with your friends, and I shall see you on Monday with the next update. Thank you so much.